Hello everyone, welcome back to my channel. In this video, we are going to understand ITR forms, various ITR forms for the financial year 25-26 and assessment year 26-27. So in this video, after watching this video, you are able to understand which SSE required to file which ITR. Okay. So first ITR is ITR Sahaj. This is like applicable for who are resident individual and their income is less than 50 lakh. And agar if their source of income is salary, pension, or one or two house properties and other source, and LTCG under section 112. So LTCG is like long term capital gain under 112A, and if it is less than 1,25,000. Okay, if it's above, then you can't file ITR 1. And following businesses are excluded from filing ITR 1, which is SAHS. Like exclusives are business and professional income, capital gains, and foreign assets. If you have income from these sources, you can't file ITR 1. Example, if you are a salaried employee with one house and bank interest, then you can file ITR 1. Okay. Second is ITR forms explained is ITR 2. This is required to be filed by the who are individuals with the income more than 50 lakh or they have an income from capital gain. Other than if you are a salary, multiple house properties, capital gains, and foreign income assets, then you can file ITR 2. But if you have any income from business or profession, you can't file ITR 2. So investor with shares, rental income, and foreign assets can file ITR 2. And now it's ITR 3. Individual HUF with business and professional income can file ITR 3. This includes proprietorships, freelancing, consultancy, audit requirements, and requires balance sheet, P&L depreciation schedule. So if you are filing ITR 3, you have to submit the balance sheet, P&L, and depreciation schedule. Example, a chartered accountant with practice income, he need to file ITR 3. And ITR 4, we also call it SUGAM. It is applicable for the people who are resident individual HUF firm, not an LLP, under presumptive taxation like 4480, 4480A, 44A. So here you can presume your income and tax accordingly. And what is the limit of the income is less than 50 lakh. And simplified, it's a simplified, you don't need to prepare the books of accounts, just presumptive percentage on turnover. Suppose if your income is 100 lakhs or so you can file like you don't need to you just pay the percentage on that income. No need to be uh, prepare the books of accounts. It's not 100. There is another limit which we can discuss later in another video. So example again, small book shopkeeper declaring present income, he can pay on his revenue a respective percentage for the income for the tax. An ITR form, this is applicable to the partnership firms, LLP, AOPs, BOIs, and cooperative societies. And this exclude individual HUF and companies. Example, LLP providing consulting services, they need to file ITR form 5. And now ITR 6, suppose there is a company, except charitable and religious trust under section 11, they need to file ITR 6. Require detailed disclosure and audit reports. Example, private limited company have to file corporate tax returns. So jitni bhi private limited companies are there, they need to file ITR 6. ITR 7, this is applicable to the trust, political parties, institutions filing under section 139, 480. So this is applicable for those kind of SSEs. An example, charitable trust claiming exemption under section 11, they have to file ITR 7. Now there is another ITR is U. You can update your return only in cases if an SSE wants to correct his past returns within 48 months. Okay, then they can file ITR U. The purpose is if you have missed any income or if you want to correct errors, then you can file ITR U where you can update it. And we can also discuss ITR U in detail in our next video. So you can wait for that once I upload that. And then there is an ITR A. This is called business reorganization. Suppose successor entities after merger and demerger, they need to file ITR A, special case filing. Okay, not for everyone. So I can make a comparison between ITRs, ITR 1 versus ITR 2, salary only versus salary plus capital gain. ITR 3 and ITR 4 is like regular books versus presumptive taxations. This is applicable for the businesses, but there are two types of businesses. One is you need to file the regular books in ITR 3, and ITR 4 you have to pay tax presumptively. ITR 567 is for applicable for the various entities like firms, companies, trust, LLP, like that. So there is a deadlines to file the ITRs. If you're filing ITR 1 and 2, your deadline is 21st July 2026. If you are filing business and professional, then like ITR 3 or 4, you have to file before 31st August 2026. And if you are filing any belated and updated returns, you have to file before 31st December 2026. Now choose the right ITR form, file before the deadline, and avoid penalties. Subscribe for more tax clarity. Thank you so much for watching this video.